Hello, welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest is Greg Carpenter, and Greg is the Managing Director for BTI Group M&A, Mergers and Acquisitions, a business brokerage firm located in Campbell, California. He's been a business sale intermediary since 1985. The current focus of his business is on the middle market, which is valued from about $5 to $50 million. He was on the board of directors for the California Association of Business Brokers for 9 years. Greg is a frequent speaker about how to sell a business, and he's an arbitrator for the California State Bar and the Santa Clara County Bar Association. And as an aside, Greg has a great home in Incline Village at Lake Tahoe. He doesn't get to use very much, and so if you got in touch with Greg, you might be able to get a nice ski place for this coming winter. All right, Greg, welcome. Thanks for joining me today.
Thanks, Michael.
Okay, so today Greg and I are going to talk about buying a business. We had another program that we did you could find on Financial Insider Weekly about selling a business. So Greg, today is September 17th, 2013. So what's the market like now if you want to buy a business? Is this a good time to buy a business, a lousy time to buy a business, about the same as it's been for a while? What's it like?
Generally, the market is pretty good right now. Businesses have recovered a lot from the depths of the Great Recession, and financing is available. SBA loans are pretty much up to speed again. Certainly not the loose underwriting standards that we had before the recession, but reasonable underwriting standards. So financing is available. Businesses are doing well. It's a good time to find a business that's profitable and growing. As the economy improves, we expect to see small and medium-sized businesses continue to improve their business performance and do better. So when you're buying a business, you'd hope that it'd be doing better next year than it is this year. So now is a good time to get on that upward slope.
Yeah. So now may be a good time because businesses may actually be able to help to pay for themselves.
Exactly.
Okay. Well, what are some reasons that somebody might have for buying a business?
The basic reason most people want to buy a business is to be in control of their own fate. People don't like bosses. They don't like being told what to do. They like to have control over their lives and over their work environment. By being your own boss, you make those decisions. The downside is you live with the consequences. Sometimes it may be the best alternative because you don't have good employment opportunities. See, a lot of people come from other countries that have professional credentials in their own countries. They might be doctors or scientists, but here often no one accepts their credentials, or maybe they have a language problem and they can't really function in a corporate environment. But they can buy a small business, and these are very smart and very professional people, and they usually have some resources, and they usually do very well with these businesses. Another is what we call the corporate refugee. You and I are getting to that age where we have some gray hair now. And if we were working in a big corporation, we should be pretty nervous about keeping our jobs, because often when people hit their 50s and 60s, the next downsizing that comes around, they get their pink slip, and try as they might, nobody's going to hire them because there's not supposed to be age discrimination, but you just can't seem to get a job. So these are typically people, again, who have great skills, great work ethic. They have some money. They're smart. They're creative. And they can do very well with a small business. And if they want to, they can either make a very nice lifestyle for themselves, or they can make a whole lot of money. Sometimes even both.
Okay. I think one of the reasons that I just want to throw out there that you didn't bring up, maybe it didn't come to mind, but they already have a business. Okay, well, let's say a CPA firm, for example, And so they want to grow quickly. So you can buy speed by basically buying a bunch of clients by buying another CPA firm, for
And
example.
that's true in many businesses, especially ones where the market is very crowded with competition. The only way you can get business is either to take it away from a competitor or buy the competitor. So sometimes that's a good way to go. And then, of course, there are those who would never consider having a job. They're just entrepreneurs, and they're hardwired to do that. And their life is fulfilled when they can own a business and run it and grow it, and that's what makes life worth living for them.
Right. Yes, we call them unemployable. We call ourselves, but anyway.
Just like me.
Okay. Okay. So, is it always a good idea for somebody maybe who's been in that corporate environment to buy a business? Does that fit everybody's personality?
Well, sadly it doesn't. When you work in the corporate environment, you get used to having all your support provided for you. And your job is very specialized in a large organization. So you're not used to having to make sure the copier is working or that you even have a copier. You're not used to making sure all the bills are paid. You're not used to maybe hiring and overseeing other people to work for you. And whatever has to happen in the business, if you don't plan it, provide resources for it, or do it yourself, it's not going to happen. And all the essential things have to happen or you don't really have a business, all the way from deciding what products or services to offer, how you're going to get customers, how you're going to provide those services or products, who's going to provide them, where do you get the products you're going to sell, are you going to make them, you're going to buy them, all the accounting that has to be done for that, paying your taxes. Remember, your revenue is not your net profit. Just because a customer gave you a check for 50 grand today, that doesn't mean you can go out and buy yourself a new Mercedes.
Darn.
Because you might only keep 10% of that. Maybe you really only made 5,000. You didn't make 50,000. You grossed 50,000. It's a hard lesson some people don't learn until they realize, oh my gosh, I've just had a really good year in business. I didn't make any estimated quarterly payments. I didn't save any money for taxes, and now I owe 150 grand in taxes.
Oh my goodness.
So you got to prepare to do all these things. And sometimes people have gotten very set in their ways and very comfortable, and they haven't had to think about these things, and they haven't had to look around. So everybody isn't going to fit into the entrepreneurial mold or profile, and there are other alternatives than just having a completely independent business, which are of course the franchises, which is sort of you're an employee in a way, but you're an entrepreneur in a way too. You're an employee in that a lot of these, pretty much everything about the business has been planned for you, and you learn how to operate it and you learn how to use it. There are support systems, even the layout of your building, what's inside of it, the color everything is painted or made out of, the products and services are being offered. All of that has been planned, market researched, refined, tested. You get professional business systems. You just have to learn how to operate it. So that's sort of a step in between the employee and the totally independent, freewheeling entrepreneur. So maybe for some people that's a better choice.
Okay.
But then there are those that, if they don't have somebody telling them they have to show up at a certain date and time, are going to sit on the couch, watch TV, and drink coffee until they go broke. It's just a fact of life.
Yeah. So my little quote here is, many business owners discover that they're a lousy boss and they have an even lousier employee who happens to be themselves.
True.
Okay. All right. So you did a little rundown here on the franchise thing. Why should you consider working with a business broker when you're thinking about buying a business?
Well, I think the big picture is you want to make sure that you're successful in buying a business that actually will serve you and will help you meet your goals. You want to be sure that you're getting what you're paying for, and you want to be sure you get into a business that fits you. And you don't want to overpay for the business either. So business brokers have skills that they've developed over years to analyze businesses and present all the information about them to buyers. Also, business brokers typically have inventories of businesses. For example, in our company, we have over 350 businesses for sale right at this very moment.
There's a lot of businesses.
And as a buyer, if you just start getting online and looking at ads, you're going to find out that you can't buy a business by looking at an ad. You've got to contact somebody. Often they're not going to be very forthcoming about all the things you need to know. A broker will package the business with complete information. A professional broker will provide you an information package that gives you a narrative description about all the aspects of the business operations, its organization. It'll give you financials, recast financials, so you can see what the business is earning. Copy of all relevant documents, especially like a premises lease, a list of all the furniture, fixtures, and equipment you will get if you buy the business. And will help you understand all of these things, as well as educate you about the process of buying. Broker will help you obtain financing. He will advise you about whether or not you're financeable in the beginning so that you don't waste your time. He will introduce you to lenders that actually do make loans to buy businesses. Many of the SBA lenders nowadays only make loans to their own clients who have been banking with them for years and want a small amount for expansion. But certain ones make loans for new business owners to buy businesses. So we'll help with deal structuring. Mm-hmm. We'll help you with form documents to write offers and get through all your due diligence. And we'll help you solve the inevitable problems that always come up in trying to get from looking at businesses to closing the escrow, of which there are many.
Okay. Who usually pays the fee to the broker?
Usually the seller pays the fee to the broker. The broker signs a representation agreement with the seller, and then the broker gathers all the preliminary due diligence information and packages the business for presentation to prospective buyers. So even though the money for the deal comes from the buyer, the seller is obliged to pay the buyer. To pay the broker.
Okay. So does this structure create any sort of a conflict of interest for the broker?
It should not, and in fact, sometimes there are brokers who are not representing the seller that do represent the buyer, although well over 90% of small business sales are what we call dual agency sales, in which the same brokerage represents the buyer and the seller. It may be in a large brokerage such as Business Team, BTI Group, one associate will work directly with the buyer and one will work directly with the seller. However, they're both working under the same brokerage, so in effect each is a dual agent and each is responsible to look out for the best interests of both parties.
That can be challenging. What are some other professionals that should be involved in this process?
On the seller's team and the buyer's team, they should have a finance and accounting and tax advisor because the decisions they make in structuring the deal and in figuring out how much to pay for it are going to affect them for years down the road when they start filing their tax returns, and especially with the buyer living with the initial balance sheet, the depreciation and amortization schedules that are set up and those sorts of things. They may or may not need an attorney if they're comfortable just using form documents that are highly evolved and have been used in thousands of transactions, written in plain English. They generally don't need an attorney for a small business. As businesses get larger, they tend to always involve attorneys because there are such complexities that form documents are not adequate to handle all of the details. They definitely should work with a banker. Mm-hmm. Especially if they're going to use third-party financing. They would need to have probably an SBA lender, or an alternative would be the California Small Business Loan Guarantee Program, and there are several banks in the Bay Area here where we live that work with this program, which is similar to the SBA's, but has some advantages and some disadvantages.
Okay.
It may also use a business appraiser. SBA loans require a business appraisal for loans in excess of $350,000. And they may also use an appraiser of equipment. If equipment is very valuable, heavy capital equipment, and it's an essential element of value for them. They may use building inspectors. If they have a triple net lease they're taking over, and it requires the tenant to maintain the building, perhaps the seller may or may not have done all those things he should have done to get it in proper shape, and a building inspector will point those things out. The seller should fix them before the buyer takes over.
Yeah. And these days, hazardous waste can be important for some businesses.
Oh, certainly, yeah. And there's a myriad of licenses and permits you may have to have depending on the business itself. And there may also be franchises, or there may be dealerships, depending on the nature of the business.
Another thing that I think people should think about is maybe looking into who you're dealing with. So maybe it might actually be a good idea to hire a private investigator. In other words, you may be buying a can of worms.
Well, that's true. Actually, if you have an attorney involved, they have resources where they can quickly and easily look and see if the person has a criminal record, and if the person is a highly litigious person who's been involved in a lot of lawsuits, in which case you may not want to deal with them because you may end up in a lawsuit with them later on.
Who wants that? Okay, well, what are some basic steps in buying a business?
Well, the first thing I think would be to look at yourself. Look at your mindset, your personality, your energy level, whether or not you're willing to take the responsibility. Look at the resources you have to work with, and consider if it's really a good match for you to be a business owner or not. And if you don't feel comfortable and competent that you're ready to step up to the plate and deal with pretty much anything that comes along, from how do I sell this to, gee, the products I have aren't selling, how can I make them sell, or how can I find something else to sell, to an employee who's always coming in late without calling, or employees, God forbid, stealing things, or troublesome customers who are always trying to negotiate lower prices from you and take your profits away. If you're not willing to do all these things, and if you don't even look forward eagerly to dealing with all these things, maybe you shouldn't own a business. But if all those things are green lights, blue skies, and smiley faces for you, then then the next thing would be to look at what businesses might be available. Would you rather have a franchise or an independent? Think about all the reasons why you might want to do one or the other. Do you want to buy a business that's very profitable? Do you want to buy a business that's moderately profitable? Do you want to buy a business that's underperforming or even troubled and turn it around? You should get some help. You should work with your accountant, maybe with an attorney, maybe with a business broker. Maybe you should even see a psychologist. Seriously.
Okay.
You should definitely discuss it with your spouse. If your spouse isn't on board,
forget it.
Forget it. And maybe your parents, maybe your brothers and sisters, maybe your friends. If you don't have enough money, that may be your first source of getting a down payment. If they really believe in you, they may loan you the money. So get a lot of help and get educated. There's a lot of education out there, and the more knowledge you have, the less risk you'll be taking on.
Okay. So I think that's a big part of the self-evaluation, sort of scoping the thing out. And then I guess you need to look at then what are some choices of the businesses and actually going and visiting them.
That's right. And if you work with a broker, you'll find that you'll get a lot of information very quickly, and maybe a lot of information about a lot of businesses. And in the beginning, you have no clue what's reasonable or unreasonable, what's market, in other words. Say this business is earning $250,000 and is priced at $2 million. Is that reasonable? Generally, I would say no way, because businesses in that range typically sell for 2 to 2.5 times earnings. That would be like 500 to 750. So if somebody's asking $2 million and it's netting 250,000, think, oh, okay. We have a seller here who either is very greedy or just hasn't been well advised about the market price for his business. If you look at 30 or 40 businesses, you'll start to get a feel for it. If you actually go see some, talk to sellers, and start looking for things, what's wrong with this business, and you realize, oops, now I know why they're selling. This guy's losing his lease, and he's going to have to move this business, and when he does, he's probably going to lose 2/3 of his customers. I'm not buying this, you know, and so on. You start looking for the fatal flaw or the underlying reason the seller doesn't want to tell you. With a broker, hopefully the broker will have ferreted out these things and will help you by pointing them out to you. And also there will be disclosure documents where the seller has to put in writing all those questions that sellers don't want to answer for the buyer. So experience will help you make wise choices.
Now there's also some of these transactions, actually you have to pay sales taxes when you buy assets and so forth, isn't that right?
It depends, yes. In businesses that have a Board of Equalization account and collect sales tax and pay it to the Board of Equalization, in those businesses the buyer will have to pay sales tax on all the furniture, fixtures, and equipment that he acquires in that sale, just as if he had gone to a store and bought it. Mm-hmm. In a pure service business where there's no sales tax collected, like a dry cleaner, mm-hmm. or a website business where you just do online work for people and charge for your hourly rate for your service, there's no sales tax collected or paid in that business. They don't have an account with the Board of Equalization, and when you buy that business, you are not required to pay sales tax on its tangible assets.
So I ruined everything because I have a sales tax license for my business.
You messed it all up, Mike. Sorry. Not that you're selling or anything.
But I have a... anyway, yeah, I sell books and other things.
Uh-oh, you're toast.
Yeah. All right. And then you need to put together your legal agreements.
Brokers will help with that. Of course, you can use a 5-page purchase agreement from the California Association of Business Brokers that worked great for businesses up into the low millions. Or you can pay an attorney $10,000 to write what he will call a custom drafted attorney, which basically is copying and pasting boilerplate from a bunch of places into one big agreement. And maybe 50 or 60 pages of purchase agreement that the attorney cobbled together from boilerplate he picked up here and there, and charge you 10 grand. It's up to you. Depends on the nature of the business, how complicated it is, and how confident you are that the seller is a straight shooter and things are as they should be, and so on.
Right. And then one thing to think about, again, working with your tax advisor, is an allocation related to the purchase price.
Right, and an allocation simply means taking the purchase price total and splitting it up according to the different asset classes that you get when you buy the business. And those are typically inventory, accounts receivable, furniture, fixtures, and equipment, covenant not to compete, lease, leasehold improvements, and goodwill. Mm-hmm. There may be others, but those are the main ones. Yeah. And they each have different tax consequences for the buyer and different tax consequences for the seller. So sometimes they're opposed, sometimes they're aligned. Often we have negotiations over how to split that purchase price up in the purchase price allocation.
Right. And then there needs to be some sort of a notification to the county for property tax reassessment.
We always recommend using an escrow. Part of the escrow's standard operating procedure is to contact all the taxing authorities and get clearances proving that the seller has paid everything that's owed, because in most purchase agreements the seller is required to deliver the business free and clear of all liabilities to the buyer. And the bank who's loaning the money to buy it wants the first lien on those assets. If there are other liens on those assets, they'll have to be removed, and those debts will have to be paid out of the escrow.
Right, but you may actually have a reassessment that happens related to, again, for property tax purposes in some cases, and especially real estate sensitive, but anyway, other assets. Okay, well, we're actually getting close to our time being up already. So why don't you maybe throw out a few more ideas related to this subject, especially maybe a particular piece of wisdom that you want people to think about when they're thinking of buying a business.
Okay, so the first thing should be really to look into your soul and decide if you're really up to the task or not. If you feel confident about it, then get as much knowledge as you can. Work with several brokers. Don't just work with one. I know this sounds like
Heresy.
bad advice for me to give since I'm a broker, but the fact of the matter is all the brokers don't treat you the same way. I, for example, will give you a 28-page document called the buyer briefing that'll walk you through the details of each step and each skill you need to have and each body of knowledge you need to get through the process. Other brokers won't tell you anything. Some may give you even more detail than I do. I give it to you in writing. A lot of people will talk to you for an hour and describe all these things. Next week after that, you won't remember any of it, but that's okay. But if I give it to you in writing, you can keep referring to it throughout the process. Knowledge is power. The more knowledge you have, the less risk you take on. If you're getting into a business and you see a lot of problems, I think you're better off to get out and look for another business than to try to come up with a purchase agreement that has a lot of the risk placed on the seller's shoulders to make those things good, because let's face it, there's probably going to be continuing problems after you take over. It's better to get a business that is making at least enough money for you to support your present lifestyle after paying debt service on any financing you might use. It's probably not a good idea to get a really big business to start out because you'll be over your head in debt, and it's probably not a good idea to get an underperforming or a failing business to turn around as a first-time buyer. Once you become an expert business owner and entrepreneur, once you've solved a lot of problems and you're confident slaying dragons, putting out fires, and jumping over tall buildings with a single bound, then get an underperforming or failing business turnaround and really create a lot of value by using all those valuable skills you've created as a business owner for a few years. But in the beginning, please get something that's making enough money to support your lifestyle with some extra headroom for the ups and downs of business, because unlike getting a paycheck every week, businesses don't earn the same every month. So you need to have some reserves. You need to buy business that has a little more income than you think you need, and you need to make sure it also includes enough to pay your debt service.
Have some jiggling room, I guess, huh?
Exactly.
And just be aware, as a business owner, you're the last person who gets paid. And the first people who get paid are your employees. So anyway. Okay, Greg, well, thank you for joining me today, sharing some of your wisdom. I hope we've given our viewers some insight about this process. This is just the beginning, as I said. It's a big step to think about buying a business, but some people find it very rewarding. We'll see you next time on Financial Insider Weekly.